Welcome to Lead with Possibility. I'm Tana Pluis, and today I'm joined by Andrew Gregson for a practical conversation on what it really takes to secure funding for your business. From preparation and cash flow to what lenders are actually looking for, you'll walk away with insights that could change the way you approach your next opportunity. Let's dive in. All right. So let's start with why is it so difficult to get a loan for your business?
Mostly it's the burden falls on the person coming in looking for the money. They're typically looking at the wrong lender, wrong kind of lender, or they're just not prepared in the way that the lender would hope they would come in prepared.
So, what do you mean exactly by being prepared?
They come in without anything. It's okay to arrive in front of a lender, potential lender, and talk about your project, but expect that this is going to be high level and they're going to ask high level questions, and thereafter they're going to look for proof. And it's ideal if you have it all ready to go. It's ideal if you walk in with it all ready to go. But the worst case example I can think of, and I've had it happen so many times, is you chat about the business, what they're going to do, and all the rest of it, and how they're going to make the business grow or whatever their plan is. And then the question comes, how much money do you need? And they say, as much as I can get. In which case it's goodbye. Don't let the door hit you on the way out. You are not prepared. You have no idea what it is you're trying to do here, and come back when you have it all sorted out. The other one, by the way, is sort of the second question that always irks everybody is, when do you need the money?
Tomorrow.
Tomorrow.
Yesterday.
That would indicate there's a problem that I haven't told you about yet. If somebody says, I'm hoping to get this all assembled in 3 months. Yay. That's right, because it takes a while. One, this all has to be documented properly, attuned to the lender's requirements, and then probably multiple lenders approached.
Okay, so don't put all your eggs in one basket when looking for money.
No, be prepared to go to lots of places.
And by lots of places, like what else is there besides banks?
Well, there's credit unions. There's what's known as Alt-A lenders, so they take the deals that the banks won't, but you just sort of missed it a little bit, and they're a little bit more expensive, and they'll be through a broker, which I would urge anybody to use, a broker, because they know where the money is, and they'll steer it to the best possible place. There are Alt-B lenders, which are the ones that the deals that the Alt-A lenders won't do because they're a little trickier, maybe a little bit higher risk, and again, all the fees, interest rate, all of that goes out because it's a risk assessment that you're doing at this point. There are very few places to go for startup money. Community Futures is one of them. You can go to angel investors who will ask for a lot. And venture capital has shriveled up, but they're still out there. And there's leasing companies. There's mortgage companies, of course, because you might be stuck with having to take money out of your home in order to put it into the business. And of course, in the end, there's the bank of mom and dad. Yes.
The popular bank of mom and dad.
Very popular.
So there is an old joke about banks lending an umbrella when it's sunny outside, and then they want it back when it rains.
Yes.
Why is it like that, and how can that possibly be helpful?
I'm glad you asked that question because it points at a place that people don't think about. So let's supposing you have a really nice business that's doing quite well. You're not anticipating ever having to borrow money, but it could happen tomorrow. Could happen, a deal presents itself, walks through the door tomorrow. Go and arrange for a line of credit or something like that now when things are good. This is the bank giving you an umbrella when it's sunny out. Then when the time comes and you really need the money, you've skipped all the bit in between of having to prepare the financial statements and all the 3 months of questions and all the rest of it. And if it is a problem that's arisen to you, let's say it's a problem that's arisen with CRA, trying to beg money out of the bank to pay CRA, that's well nigh impossible. But if you have a line of credit, you can do it now. And of course, you figure out from there how you're going to repay it. But at least you've settled that issue. You've cleared that hurdle. So everybody should have access to a line of credit, even if you never use it. Now, on that, because you and I have talked about this a little bit, I worked with a firm in Langley. It was in serious financial trouble, and the owner of the company came back one day and showed me a check that he'd received as a deposit on a big job that he was about to undertake. It's $1 million job. He got a check for $100,000. Great. Went to see the accountant. What are our payables looking like? $100,000. So that check would have gone into the bank account and made barely a ripple and left him without anything. He would have had no cash to do anything with. So we thought about this for a little bit and went to his bank, which was TD, and convinced the bank that we would put this money, we would buy a GIC, Guaranteed Investment Certificate, and that the bank would loan us dollar for dollar against it because it's liquid, it's totally liquid. So he was earning money on the 100,000, and his line of credit was costing him about the same amount of money, or slightly more. So the cost of money for him was really, really tiny. But suddenly his balance sheet looked great because he had this huge asset just sitting there.
Yeah.
Right? And the banks, I discovered, have a left hand and right hand. And the right hand doesn't know what the left hand is doing. So he was getting phone calls from the part of the bank that saw the asset but without knowing the liability and phoning him up saying, do you want to buy something? We'll loan you some money, not realizing it was completely already taken care of. So in that sense, you're getting a great welcome at the bank because you've got a lot of money in there. This is a bit of a card trick, if you like. But what it does effectively, and the reason we did this, is to give that company lungs so that it could breathe. You can use up $30,000 or $40,000 of it and then top it back up again through your revenue stream. And the company has lungs. It can breathe. It can do the things that it needs to do. We need a shipment of wood for the sake of argument. No problem. We can order it up knowing full well you can pay for it.
That's actually a really great tip. And when you said earlier, like sometimes needing a mortgage against your house, it seems like giving them the GIC for security would be a way better option.
Oh, yes.
And something that is just so easily not thought of.
Mortgages against the house typically is for a startup or a business that's in trouble because there are very few options left. And this comes back to the very first comment I made about your lender, because banks aren't interested in either of those things. You can't go to a bank for a startup unless you want to offer some good security like a lien on your house. So when I said no about your lender, there are dozens of different kinds of lenders out there. They all have different tastes. And when you're talking to the lender, the things that you're looking for is what's their limit? Is $50,000 too much or too little? Is $1 million too much or too little? How quickly can they do it? What kind of security are they going to ask for? There's so many of them. And so you have to ask a lot of questions. And it's worthwhile because eventually what you discover is someone who's willing to work with you. And that person is valuable. They're solid gold because if your business does take off, all businesses they grow need more access to cash. You can't generate all of it on your own. You can, but it's going to be a slower growth business than perhaps it needs to be. And you will miss opportunities because you don't have the money.
And do you approach them all directly, or you were mentioning a broker? Is this where?
The usefulness of brokers, although they cost you money, the usefulness of brokers is that they have already done all this homework and already know who's going to lend. Do they have a taste for this kind of a business? What's their limit? What's their minimum and maximum? And kind of how they approach the risk assessment. Are they going to be looking at this and saying, this is a really high-risk business, we don't want to touch it? And there are plenty of businesses like that. Plenty of industries that are regarded that way, like hospitality, for example. High risk. So you pay for it. So a broker is useful.
Good to know. So what exactly do lenders look at?
Well, of course, they're looking for your ability to repay. And of course, you're going in there and you're chatting with them and you say, of course I'm going to repay you. It's just nice, but you have to prove that. So what do they look for in terms of proof? Well, they want to know your history. What's your credit look like? What does your business credit look like? If you've had struggles in the past to repay, that hurts because that's a character flaw that's come in there. Unless, of course, you have a really good solid reason and you have a good story. I have done multiple finance jobs where someone has got poor credit, but they have a really good story. Divorce is one of them. Everybody understands that because it hammers both sides, by the way, it hammers your credit.
And a good story will actually buy you a little bit of...
Yes, it could buy you some time in front of a lender who will say, all right, that was a problem. He's moved on. Good story works. I've been ill. I left the country for 3 months or 3 years. I have been horribly embarrassed by finding out something that came out in the paperwork subsequently that I didn't know about and wasn't told about. But if I've been told the truth, what's going on, I say it's a divorce. I can say, yep, I know about that. This is the reason it happened. And I look well prepared and I look good to the lender, which means that my borrower looks good too. Oh, you were straightforward. Good. And there's very few secrets these days. Social media is taking care of that. Sorry, the other things that they're looking for is, what are you going to spend your money on? Oh, I'm going to buy machinery. Good. I'm going to buy another business. Oh, good. I'm going to pay off CRA because I owe them a lot of money. Not good. We don't finance debt. If it is equipment, you want to see a complete list with everything on it. And ideally, it's something that has a serial number on it because then they can track it. Assets, of course, I talked about homes. There could be all sorts of things that you have that you would be willing to put up as security for the loan. And, of course, they're looking at you to see if you are credible. But if you walk in there and say, I'm a one-man show, it raises a lot of questions about your ability to do this as a business. On the other hand, a guy comes in and sits down and says, I've got this business and I have a board of directors and I have an accountant. Here's his name. Here's his credentials. You look well prepared. You look like a businessman. Community Futures did some work for 4 years. We did a lot of training. The failure rate in small businesses, and we're talking about startups, failure rate in businesses is 95% in the first 5 years. With Community Futures, the success rate was 65% after 10. And why? It's the training. You teach people how to market. You teach people how to set things up. You teach people how to read a financial statement. But once you do all of that, someone's walking out of there prepared, hence the success.
So in that application process, lenders are looking for documents.
Yes.
So, what are the necessary documents?
The one thing I neglected to mention on the question you just asked, which is
what they're looking for.
What they're looking for is also going to have to be documented, is your marketing program.
Okay. They want to see it.
Oh, yes. Oh, yes. So the ones that fail are the ones, and I've had them, where somebody comes in and you say, well, how do you arrive at these revenue numbers that you've posited? Oh, well, the market is worldwide, it says on Google, is $5 zillion, and I'm going to take 1/10 of 1% of that. Fail. What I want to see is someone who's already either tried the product out and tried it on customers, potential customers, or real customers, and they paid for it, or they've got purchase orders, solid gold, both of those, or they have a program that is calculated to go after a particular customer. And I'll give you 3 examples here. One is a lady who came in to me selling chaga mushroom tea in bags. How do you know this product will sell? And she replied very calmly, I've already sold $70,000 worth of these, one at a time at farmers markets. That was an easy deal. Second one was a fellow who came in to me with probably a grade 8 education. I flipped immediately to the marketing. And I said, how do you know that you're going to sell to all of these people? He says, I already do, but use it for another company. And they all know me, so they'll come to me. Easy.
What came to mind is like Dragon's Den or Shark Tank. Like you
Yes.
sound very much like what the dragons and sharks are looking for.
Yeah.
Yeah.
If you do watch it, and I'd encourage anybody who's thinking of going into business to have a look. Or you start, you're going to branch out, is have a look at the way they handle it. Some of it's really quite nasty and brutal, but it's honest because they're telling you what the bank manager will tell you. Their focus is on, have you made any sales? How do you know you're going to make any sales? So the first place you look is the marketing side of it. So that being documented, and how are you going to do that, is the core.
And forecasted as well.
Because that supports your forecasts. Now,
Yeah.
this documentation all supports one another, right? So if you've got an existing business and you're looking for additional funding or that line of credit that we talked about, 3 years of your financial statements that are accountant prepared.
Not your in-house intern bookkeeper
The
financial
only time
statement.
that works is if you're, 4 months into the year, 5 months into the year, and you don't have statements that are going to apply to this year. You've only got the last, but they're still pretty current. Right. So that's about the only time you can get away with that. So you want your marketing plan worked out. I would urge you, if you're going to be looking for money, pull your credit history, personal and your business, if there is one for the business. And there's a reason for doing that. If you go to multiple lenders, as you might have to do, each time they're going to pull your credit, and each time you will lose 5 points on your credit or credit score, 5 points.
Ouch.
So you don't want to do that. So pull your own, and they will pull it one more time, but they'll pull it on the day that they're going to give you the money.
And when you pull it, it's free, is it not?
Yes, and it doesn't affect your score.
I've never actually looked for. Where do I even look to
Down on
pull?
Brad Street.
Okay, I'm registered with them.
Good. Most people are not, but you can still get stuff off them. And there are, I think, I'm a little out of touch right now, but I think there are other places you can look. Google search will show them all up. If there isn't one for you, don't panic, because if you can't find it, the banks can't find it. Now they'll put all their weight on your personal credit, which is okay too, if your credit's good, right?
Yeah.
We talked about this a little earlier, use of money. If you're buying equipment, you want a quote from the equipment supplier that says it's going to cost $15,000 or whatever it is. And it gives you all the detail, all the specifications on it, so that it's easily verifiable. If you're unable to do that, you can pull stuff off the internet. Some people are reluctant to give you a piece of paper knowing this is just for, there's not
You're
really
shopping.
a deal here, you're just shopping.
Yeah.
But there's plenty of places that where you can pull off, here's the specifications on this particular machinery, new. Here's the specifications on it used and the two different prices. And you can put both of those. This is supporting documentation. All of it goes to support why you were asking for money.
So you're already showing them the residual value if something were to go wrong as well.
Well, there's that
Anyway.
as an asset. They may just decide to tag that right out of the gate, which is great. The most important, you're going to show them the financial statements. There's one that you need to create for yourself, and that is a cash flow forecast. Now, I've taught lots of people about cash flow forecasts. The financial statements are your profit and loss, where you're guessing what the revenue and your costs will look like, which is great. That's the historical, rather. And your balance sheet tells you a whole bunch of information, but all of that is for a corpse. It's already dead and buried. There's nothing you can do to revive it. It's dead. It's on the slab. And it's cold. What the lender wants to see is what's going to happen in the next year. Well, here I've got it all worked out. These are my revenues based on what I've put down as my marketing plan, how it links together, what my margins will look like, because this is what my pricing structure will look like, and how I'm going to end up with this margin. Here's what my costs are going to look like. My startup costs for this, because there's always something you have to pay for in the beginning of any project, and the rest of it are going out. And this is how I start with this money, and how I end up here, and go on like this. And the first year is the best year, because that's the most solid. So you have a pretty good grasp of what the costs are really going to look like. Year 2 becomes a bit sketchy, and year 3 is really sketchy, but you do all 3. It's a job that everybody I've taught to do hates, loathes, and detests, but after they've done it for 6 weeks, 8 weeks, on a weekly basis, they love it. And the reason for it is that, as I said, all the other financial statements are about something which has already happened, and it's historical. Now you're predicting the future with some numbers. So now, my argument for doing these things is fairly straightforward. Here it is. It's the 2 days before the end of the month. You've got payroll coming up, rent to pay, and suddenly you've got a bill in front of you for insurance for $30,000, and you don't have the money. Now what? This is the panic button time. And you already know that the lenders are not going to be able to get the money to you that fast. So it's check your credit card balances and go to the bank of mom and dad, all those things that you have to do because it's a panic. Now, if you had done instead a cash flow forecast, you would have realized that this bill is going to come up for insurance, because it only comes up once a year, and it's always in July. That would have been in your forecast, and you would have been planning for it. Because if you've got 2 or 3 months to figure out what you're going to do because of this deadline coming, and you have time, you can figure it out. That becomes a business which is very much under control instead of reacting and panicking. And that's what a lender likes to see. Why do you need to borrow the money? I've got this cash flow issue right here in month 7. How do you know? Here's my forecast. I'm trying to make sure that it doesn't happen, but I suspect it will, and that this is how I'm going to get out of it. Okay, you know what you're doing. You're a businessman.
I have to say I'm sold. I have not been doing my cash flow forecasts. I
Okay.
haven't done that for years.
Yeah.
Had a whole bunch of big expenses come due at the same time. I was not prepared. I knew they were coming up, but I didn't stop to really figure out the full impact.
Yeah.
And yeah, it was
struggle.
not pleasant.
Not fun. We've all been there. And I've had 5 businesses, and all of them startups. And even when I was running businesses for other people with 75 employees, there are cash flow problems all the time. All the time. Every business has cash flow problems until you get to the size of being Walmart or Apple.
And when I started my career,
Yeah.
it was weekly, every Friday, cash flow forecasts,
There you go.
religiously.
Yeah.
And it was incredible, the difference that it made.
Yeah.
So it's funny that you would take me back to the very beginning. And yeah, so I'm actually quite excited to put that in place, I have to say.
Of course, what this amounts to, of course, is a business plan. These are all the components of a business plan. I just didn't call it that. And anybody that walks into, when you get all this documentation together, put it all into a 3-ring binder and make 10 copies of it.
Or digital. That's what we
digital.
would do. A digital portal.
It's hard to get.
It's secure.
I understand, but it's very difficult to give it to a lender that way. The banks won't open any attachments.
Is that right?
Unless it's internal. That's a different issue. They use their own system.
So they'd have to be printed out for them, because I'm always looking for how do we digitize everything.
understand,
So
yeah.
I guess if we did have our own digital portal, our own live digital business plan that's secure, then when it comes time to speak to a lender or whatever, we could just print off. Would that work?
I think so. I've tried to give them business plans that are on a thumb drive. Can't take it. Could have infections. It'll get into the system, and so they know. Can I email it to you? No. Same
Okay.
reason. Can't open them. Won't open them. They're forbidden. So the way you're doing it might work, because you could go in there with your laptop and show them, but it's. I
The
personally.
entrepreneur would be prepared,
Yes.
and then they could turn it into paper.
Exactly. Yeah. No, I kind of hinted at this earlier. You can go in there and have a chat with them and see whether they have a taste for this. Can you lend this amount of money? Can you lend for this kind of industry? Can you lend for, and how quickly could you do it? And they say, yeah, this sounds like a really good deal. Get me the documentation. Okay, no problem. A day later, you walk back in with it all complete.
Yeah.
Those are the wonderful deals when it's all complete. And I can tell you honestly that every broker will tell you the same thing, that the deal that comes in pieces, the financial statements will be available in another month after my accountant gets through with them. That deal goes to the top left of my desk, and it stays there until it's complete. I don't touch it. I don't talk to anybody. Why would I do that? I get paid for doing that, right? I want to see a deal that I can get punched through right away, and so do you. As the borrower, you want to see a deal that happens quickly. So make sure you've got all the stuff. And then shopping. Because what do you do after the banks say no? The first place you should go is your own bank. They know you best. They pull up your account history and see what you're doing, whether the business is growing, and all the other things. They know a little bit about you. And that bank says, sorry, Tana, we're just not going to do this deal. At that point, you say, thank you. Tell me why, so I can improve my presentation. Or if there's a gap here, if I've made something wrong, tell me so that I can fix it before I go to another lender. It's wonderful to be able to do that. This is why you have multiple copies of your business plan and all the stuff worked out. so that you're not stuck, right? Be prepared to go to multiple places. Be prepared to go down the list from banks to credit unions. Credit unions are pretty good because they have some local knowledge that the banks never have. And then there's Alt A, Alt B, which you get at through brokers because they don't advertise themselves. And then there's private lenders out there. And all these people, as you work your way down through the food chain, because you are food at this point.
I like what you said about coming in fully prepared with everything.
Yes.
I think about some of our clients when we're doing tech builds, and we give them a checklist. This is what we need to get started.
Yeah.
And it is efficient for everyone. And we inevitably have people that they'll send you this and they'll send you that, and then it does not work the same. It
Nope.
doesn't feel the same to have that in your relationship with your clientele. It stresses my team out.
There's lots of negative connotations about doing it that way, doing it piecemeal.
Yeah.
Now it happens, I've probably done it myself without realizing, because you get busy. Well, that also is an indicator that you've got a problem with a business that's somewhat out of control.
Yeah.
And you're having to be the hero and do everything in your business instead of having people I'll get that for you. Not a problem, I'll get that for you. And next thing it arrives.
And it's so ironic because we did a debrief yesterday on client project that was very chaotic.
Yeah.
And we talked about all kinds of solutions.
Yeah.
But we didn't talk about what you just said. Letting them know until we have everything, it's going to sit on the left-hand side of our desk and we won't start.
Yeah.
But when you have all the information to us, we will begin.
Yeah.
And we will be done in this amount of time.
Yeah.
Guaranteed.
Yeah.
And how simple is that? But that's actually not what we said. We allowed ourselves to get caught in the swirl of their chaos.
Their
and
chaos becomes.
Oh, I'll give it to you this day and I'll
And it
do all
didn't.
these things.
Now
and
you're following
didn't.
up. No.
And then that's how
Don't bother.
scope creep happens too.
I don't mind doing one follow-up because things happen. If I'm telling somebody on the phone that I'm going to need this list, these items, I always follow it up with an email that says exactly the same thing. And I tell them, I'm going to follow it up with an email so you've got a complete written list.
Yeah.
Okay. And then, a week later or 2 weeks later, nothing's happened. I follow it up. I did send you the list. How are you doing? And that's all I'll do. Because you're the one that's wanting the help, wanting the money, wanting whatever it is. At one point, I had 14 pretty heavy-duty files on my desk. And I wondered how I was going to get through all of these things, right? So I came up with a formula. I separated them into 3 piles, asking the questions, am I going to get paid? How fast am I going to get paid? Is this a job that's going to take a year to fund? How much am I going to get paid? And for a broker, you should know this, that for a broker, it's exactly the same amount of work you have to do for a $50,000 loan as it is for a $1 million loan. There's no difference in the workload. So if I have a choice, the first one that gets done is a $1 million loan, of course, because it pays better. And I have bills to pay and family to look after, so what are we going to?
Well, the numbers have to work, right?
Yeah. So that's kind of the potholes, as it were, on the road to getting a business loan. And that's why lots of business loans don't make it, or they come back chopped up into pieces, or with ridiculous demands. There's a fellow in Vancouver. His name is Basil Peters. He is a venture capitalist. He made a lot of money out of an internet company that he sold. And I talked to him. I said to him, why is it that the venture capitalists want such a huge return on their money? And he says, it's actually really simple. It's a numbers game. I said, okay, how does that work? He says, well, we know, because we chat about this among ourselves, that 13 deals that you fund will fail. And we have to make all of our money back on that 14th deal. So you're going to pay to cover all the other ones that don't work. Now, these are smart people who have the money. They do all the homework and research, and still the businesses fail 13 times out of 14.
Really?
Yes. It was an eye-opener for me. I did not know this.
And of course, we're talking deals they're not bank deals. They're not credit union deals. They're like we've worked our way down through the A and the B lenders. So
Yeah, this
they
is
are long shot.
Yeah, well, this is the guy that comes in with an idea. I think I'm going to do this, and here's why I think it'll work, and here's who's going to buy it, and this is the kind of money, without having put a lot down onto paper for it. It's Dragon's Den stuff. They're venture capitalists. You watch how much they ask for, how much you want $1 million. Okay, I want 50% of your company, or numbers like that. They're always higher than you'd expect.
And sometimes they're lower than expected.
Oh yeah. All depends on the credibility that you bring to the table, so to speak.
So yesterday we were talking about family business, and sometimes there's some family entitlement in the business and really does have a major impact. Is there anything any wisdom you want to impart, or stories that you can think of that help people understand it's not always the best idea to...
I understand, even though I don't have kids, the impulse to want to hand it down, if that's possible. That's not always possible. There's plenty of, where we live, there's plenty of plumbers and electricians that have built nice little businesses, done everything for the family, and the kids have gone off to law school, and they're not going to come back and be a plumber or an electrician. But let's supposing you can offer it up to, there's a family member who's genuinely interested in it. The people I've admired most were the parents in this instance, who had the guts to say, you're not going to work in my company until you have worked somewhere else first. Go away for 3 years and learn someone else's bad habits before you come here and learn mine. The result has been really positive, because they come back understanding it. It isn't all about entitlement. They could have been fired at the other places if they didn't work. So they worked. They learned. They got a value for the money that they were, here's your paycheck, thank you very much. They got a value in it instead of just being a handout for mom and dad. Right? Again, send them off to somewhere else first. That's the education part of it, sort of a different way of doing it than, and again, if they're going to come in and work in your business and you can't send them somewhere else, then you start sweeping the floors. Let's see how humble they can be, and work your way up. Do every job in here. I have always maintained in all the businesses that I've owned that if I can't do the work, I can't tell someone else to do it. I have to know how it's done. So
technical jobs like, in IT, and where specialized skills, like even bookkeeping. If you are a plumber and you need to hire a bookkeeper, it's another role that I often see people make not the best decision, because they're evaluating a skill set that they themselves don't have. Same with technology. I see that a lot, because technology unto itself is not necessarily the answer. You have to understand the business, and right, like sometimes that's a tail wagging the dog.
Yeah.
You get a really strong technician, but they don't understand the business, and you've just gradually steered off course.
Yeah.
And lost sight of your original intention.
Yep.
So what about those jobs?
In the 60s and 70s and 80s, when I was hiring lots of people, that was part of what I did. We used to ask for letters of reference. Then you phone them up, say, what was this person really like? That's become more difficult these days, I understand. Lawyers have made it difficult to say rotten things about someone who was a rotten employee. But you can read between the lines. And there's social media. And there's all kinds of stuff that you can do research on the social media and on the internet to find out what they're really like. So if you're going to hire a bookkeeper, you need references. That's only fair. You're going to hire an IT guy? Yes. And the worst one, marketing.
Yeah.
Because there's plenty of people that put their shingle out there as a marketer and they really have no clue. And you're going to spend a lot of money and spend a lot of time and effort on it, and it'll come to nothing, and you're going to be really disappointed. And you think it's your business, but in fact, it was that individual who couldn't do the work.
Yeah.
So references, first of all. Secondly, if you're going to hire someone to do a specific job, you have an idea in your mind what it is that they're really supposed to be doing. Not on a day-to-day basis, but what they're meant to achieve. So in one instance, I had this fellow working for me as a marketer, and I was talking to the client, and he said, I've got this big problem. So what's that? And he says, I sell to countries all over the globe, but not a thing in South America. I said, oh, why? He says, I have no idea. So I went to our marketing guy, and we concocted a plan and went back to Harry, and I said, we think we can get you into that market without any big expense in 3 months. He had a brand new customer who opened a warehouse and stocked his stuff, and then it spread from there. So very specific. And it's like hiring anybody, really speaking. What do you want me to do? Well, I want you to increase sales by 25% in the next 3 months. Okay.
But it does seem in that sort of family business context, the jobs that they don't understand themselves, like the bookkeeping or the marketing, or those are the ones that they get, or even IT. Oh, my nephew's really good at computers. What does that mean?
Nothing.
So again, that is where I see them sidestepping what you just said about be clear on what the outcomes are from that role. Check references, like do your homework.
Yeah.
But instead of that, I often do see that's when a family member or a friend
They
or
sneaked
someone's
in.
pointed
Yeah.
to a role that they really are not truly
Not suited
qualified for.
So it goes back to the latter part of what I was saying. Like if you have written objectives and they don't meet the objectives, out the door. So I had this happen in my family. My next youngest brother owns a music store in Maple Ridge. My next brother down was laid off from his job. So I get the phone call from the younger brother saying, I can hire him. He needs a job. He needs an income. I said, yeah, I understand. And I said, but you shouldn't hire family, ever. But I want to hire him. And I said, okay, you've convinced yourself that you want to do this. That's fine. But be absolutely clear that this is a business relationship and that if he quits or you fire him, it's not a family thing. No harm, no foul in this instance. It's just a business decision. And make it clear in the interview when you talk to him about it, before you make him the offer, hey, this is what has to happen because I don't want it ruining the family relationship. Okay, they accepted that, and 3 months later you fired him. Right. And they're still best friends. This is good.
Nice.
It worked. Clear objectives.
Right up front.
Start as you are going to end. Now I would say out of all of those people that you talked about, the bookkeeper is one that I have the most difficulty with because I have seen way too many people as owners of the company that give up what used to be referred to as the iron triangle. So there's 3 parts in how you control your finances. You write the checks, you reconcile the bank account, to make the deposits. You hand all 3 over to the bookkeeper and they see a stream of money flowing in front of them. The temptation as a human being is very great to dip your finger in, but bury it. Do I know this happens? I have had it happen to other people. I've seen one instance where the guy, my client, his bookkeeper robbed him of $100,000. Another one where his bookkeeper robbed him of $30,000 and doubled her salary while he wasn't looking. The best one to have is write the checks. Sign the checks.
Yourself.
Yeah.
With supporting documentation behind everyone.
Correct.
Yeah. Well, I've seen examples of, like, again, $100,000, the most trusted person that they had on their team.
Yep.
Local not-for-profits in town have had, again, trusted employees and leaders.
Every year in BC, I believe the number is between 6 and 9 lawyers lose their licenses because they dipped into the trust funds.
6 to 9 lawyers in
every
BC
year.
Every year.
Yes. I believe that's the number. No one sees it, and they always think, I'm going to put it back. The difficulty is, I've always pictured it to people, is if somebody's standing there on the edge of a river of money going by them, it's so tempting just to put your finger in and carve out a little bit. It's so tempting. So don't give them the temptation.
Agreed. The only thing that my mind has gone back to your, like, left-hand side of the desk and that project that went wrong. And I'm like, because part of it wasn't just the information didn't come. It's all of a sudden something changed and this information is going to go on hold. But this was included in our proposal.
Yeah.
So option A was what we bid. And then option B is an urgent pivot.
Well, in the lending business, for a file to come in bits and pieces means that some of it is stale dated and it's no longer valid. Now, you can still go around and talk to people and say, my credit's fine. Here's what it was 3 months ago. If you were to pull it today, it would be similar. And that's acceptable. But they're going to pull a current one to make sure that you didn't do something stupid in the meantime. And by the way, has that ever happened? Oh, yes. I lost a $17 million deal because the guy went out and did something idiotic against our wishes. It was 3 days before the funding was to happen. We lost the deal. He went broke. He had to leave the province.
So he was this close.
Yep. That lawsuit on his credit, because it shows up in your credit report, killed the deal.
Yes, I know a businessman that if he's not happy, he'll launch a lawsuit because it blocks everything.
Yeah. Well, I've pulled lots of credit reports and I see on there all the time is the worst one is TELUS and Rogers. Because if you miss a payment, they immediately put that you missed a payment on the credit report. And if you decide, I'm not going to pay you guys, you know, it was a screw up. You charged me something, I didn't do it.
Piece of equipment that was returned.
All that's kind of jazz. And I'm going to go to Bell. Now, that's fine. But that note is still on your credit report. And the only way to get rid of it is pay it. And they know it. So you're trying to get a refinance on your house. You owe TELUS $172 that you don't agree with. You have to pay them. Because your mortgage won't go through otherwise. Pay them. Is a very bitter pill.
Your point about TELUS, I feel that pain.
Yeah, lots of people have because they're brutal about it.
Yeah.
Because they know how the system works and they work it.
One time I got congratulations, you're pre-approved for whatever, 17 or 30,000, like some big, some big number through whatever John Deere's credit agent is. I'm like, junk mail, trash it. Randy picks it out of the trash and it's like, I think you better call them. So I call on Monday and yes, in fact, I had made some purchases. My brother picked them up for me in Abbotsford of John Deere equipment. My credit application is handwritten. I have an Abbotsford address. I've never lived in Abbotsford. I had a cell phone on my credit application and it's like, okay, so now I have an RCMP file. Like, what is going on? Sure enough, somebody rented an apartment in Abbotsford in my name. They got a Bell cell phone in my name. And now I'm and all this John Deere equipment. It's summertime. The radio, I'm driving, the radio's on. I'm like really unsettled. Like, how did this happen? What do I do? And then I hear like Brown Brothers Ford or like one of the car dealers in Vancouver on a radio ad saying, we have a push, pull, or drag sale. Like, come on in on approved credit. And I just remember my heart sank because I thought they can go there next.
Yep.
And that took a long time to clear as well. And we did find out that year our business had, our T4s that had been submitted. And these were before you submit them electronically. They went by mail.
Yep.
And all these mailboxes in Chilliwack were broken into. Apparently, all of our T4...
Because they've got your social insurance number.
They had
everything.
Yeah.
Oh, geez.
And, yeah. So that was quite an eye-opener in the world of credit. And that was before all this internet fraud. And
there's so much of that now.
that was,
And it's
when it was a lot more understandable.
Yeah.
And linear.
When I was traveling a lot in the U.S., the company advised me and said, put away your credit card. Go and get a prepaid one. I said, why? And they said, well, at some point, you're probably going to have your credit card information stolen. I said, yeah. And so if they steal a prepaid one, they can only steal from you what's left on the card.
That's actually a really good idea. I've never thought of that.
If you're in places like international airports and like, where there are plenty of thieves, this is a smart thing to do if you're in public transport a lot. It's a smart thing to do. Now, to your identity theft issue, when we first moved here, who was a fellow that I met walking the dog, he carried a letter with him. He said he had to go across the border 2, 3, 4 times a year, and he carried a letter with him because he had the same name and the same birthday as a murderer that they've been looking for years. And they get to the border, and it was instantly alarms and guys, guns, and all the rest of it. And he produced this letter. It's not me.
That would be unnerving, wouldn't it?
Oh, yeah.
Or a
Every
terrorist,
time
like a
you
known
went.
terrorist. Yeah,
Yeah.
of course. Especially after 9/11. Wow.
So it can be worse.
Okay. Anything else that wisdom you would like to impart?
A little hack, if you like. Don't borrow money in Canada before July 1. The banks have a calendar year budget, and they begin the year with a budget saying this is how much money we want to put out, and these kinds of terms and conditions. And if they haven't met their targets, they drop their trousers a bit. So you're going to get better terms, maybe better interest rate after July 1.
Good
So
to know.
if you can push it to there, you should do so.
That's a great tip.
Yeah.
Do you think the same tip applies to grants and government funding that goes on a, March 31st year?
No, it seems to be, I've looked at lots of them, it seems to be the other way around. That by the time April 1 comes around, that everything is already spoken for that year. So no, I'm sorry, you're too late. But it's only the first of the month of April. Yeah, it's already too late. Everybody applied and we've already approved them.